All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on CarnivoreTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here snapping a 6-week win streak. You can see here on the S&P. So finally a red week. Not by a ton though. S&P down really just more so fractionally than anything by the end of the week. But we did come up into kind of one of these shorter term trend lines I'm going to be watching going into next week. You can actually see that on Wednesday we came down and tested the blue line, and then Friday we got a nice bounce off that in the end of the week. We tried to break out on Friday, and we overthrew that trend line and then came back in. So bears definitely defended here, and there was a level I was talking about really all week, again kind of as a shorter term point of control, and that's right around 58.20 on SPX. If you follow SPY, that's going to be 580. So this has been a point of control over the last couple of days, and as long as we're below that, bears are doing a little bit of work here. But again, let's just also put into perspective, above all the moving averages, trend is up here. But maybe we are due for a little bit of a pullback, a little bit of a correction. We've been looking for that here for a while, and the market has just defied gravity lately. We do have a lot of volatility events coming up though. This past week we had some more earnings. Obviously Tesla reporting, big move there. And it looks like the market really had that mispriced as Tesla squeezed all the way up to 270. Of course, the week before we had Netflix, which we talked about. But this week we're going to have Apple, Amazon, Microsoft, Google. So the rest of the big major players, I mean, that's basically like 20% of the S&P right there. And then we also have jobs data all week. And we're going to get the QRA from Yellen, I believe, on Monday. I think at least the funding, and then the actual issuance comes out, I think, Tuesday or Wednesday. We also have some PCE data. So we're loaded. We've got jobs all week. We've got earnings. We've got QRA. We've got inflation data. And then, of course, the week after that, we have the election and the FOMC a day later after Super Tuesday. So next 2 weeks, we're stacked here. So a lot going on. The market is right now essentially pricing in a Trump victory. So that's kind of essentially, what we're looking at with a lot of things. You can see solar stocks have taken quite a hit. One of the ideas I've had here lately is possibly solar maybe as a bottom pick play. Maybe going into the election, if there's a good setup, I would be interested in maybe picking up one of these. If the market's priced in a Trump win, you got to figure the downside's kind of already been looked at, and if he doesn't win, then you could see a lot of upside. So something I'm watching, but we'll be keeping a close eye on some of these policy-sensitive sectors here. Certainly marijuana stocks getting a really good bid earlier this week. And nice breakout there on the MSOS, TCNNF, also near 52-week highs. So we'll see if these run into the election too. I think there's a high possibility of that. Obviously, Prop 3 in Florida, that's the big key. Does that vote pass? If it does, these stocks could get a really big bid. That is the Florida names anyway. I'm sure the the Canadian names would also get sympathy as well. You'd see MJ here breaking out of this nice falling wedge. But a lot of stuff to look at here going into the election. We'll see if we get a pullback. If we can break this trend line, we could look at 5675 to 5700 on S&P. And if we start to break up, 5900, and then honestly, 6000 is not that far away. So that's what we're looking at right now. You can see the triple Qs here. Also, again, just struggling with that 500 handle. We've hit it, twice now over the last 2 weeks, and we have not been able to get through that. You do have higher lows, though, right? So you got 1, 2, and then 3 right here. And then, of course, the official double top, 503.52 right above that. So Qs are not in bad shape. They've been recovering here for months, really since July. They have not made new highs, but they are coming back now. And again, if we do get through this area, this trend line breaks, we could start to see some, more of a corrective move. Maybe even, I don't know, it'd be kind of deep, but at least for now, but maybe even like 460 back to the 200 MA. I don't know if it goes that deep, but that would certainly be a point of interest there. IWM here, again, kind of a similar pattern as a lot of things right now. So equal highs, 1, 2, 3, and then higher lows, really. So this is trying to break out here. And I think if we do get an end of year rally, this is something that can make it to new all-time highs. So IWM, we'll be watching that closely. Higher lows there. The Dow was really the only index that did some damage this week. And I'm going to say damage because we had this area right here. All right, so this was a breakout, and we closed back below that on weekly. So not the greatest look there for the diamond. So maybe that's suggestive that market is going to correct here. Next level is right around 410, 415. Still above the 50 MA, but it did lose the 20 on the daily. It's not a big deal. It's nothing major yet, but definitely did lose a little bit of a level there, and possibly a short-term false breakout. Much like the S&P here on Friday, getting above that trend line and then failing to break out. So momentum may be declining a little bit here. SMH here, up 1.16 on Friday, but again, came off the highs. And the semis right now are a group of haves versus have-nots. NVIDIA, Broadcom, TSM. Those are the haves. A lot of the AI kind of based names. But then you have like KLA, ASML, AMAT, Qualcomm. Some of these other names are well off their 52-week highs, well off their all-time highs. So it's kind of a have versus have-not situation here. And that's why you can see the semis, the SMH is still kind of split. You have a big red bar here from 2 weeks ago with volume, and we still have not been able to get back above that. That's where we see the the weakness here in why I said the Qs maybe could have a deeper retrace if they break down here. Because I'd be looking at the SMH to get down to maybe 230, maybe a pierce of this trend line. SMH is a huge weighting in the Qs. So a lot of semiconductors, semiconductors making a huge portion of technology. A retrace there would certainly be a drag on the triples. So on the other hand, you've got a lot of strength still in IGV. So again, cloud has been taking up the mantle as I suggested it would over the summer, and it has been very strong here. ServiceNow reporting earnings that did have a nice gap on Thursday, and for the most part, it's held the gains. That's obviously helping out in the cloud space. So IGV still pretty strong, and just off of all-time highs, really. Transports, again, continuing to just pull back off that 16.6 handle we talked about. And again, no problems here. Still big picture, big higher lows here and equal highs. So range is getting tight here. So transports are hanging in there. Now, here's what I think could possibly derail, if there's going to be something that could, or anything that could derail this rally here. And I'm not talking specifically about the 2-year. Part of the reason why I think the market has backed off the highs lately is because yields have started to creep back up again. But specifically the 2s. You're going to see the yellow line here. That's the effective Fed funds at it's at about 4.83. 2s are just now cracking above 4.1. You can notice here, you got a pattern. You could easily make a case that that's an inverse head and shoulder. If the 2-year breaks above this, we're not getting rate cuts. Okay, so that's off the table. You get back up here, there's really not a lot of resistance. There's really no resistance between here and 4.4. That would put the 2-year yield within 40 basis points of the Fed funds. AKA the Fed cannot cut. That's something the market is not pricing in right now. And that would be a big deal because the long end right now is kind of stalled out. And if the 2-year keeps gaining with the long end just flat, you're going to have a yield curve that's going to go back to inverted. Again, something the market has not priced in. I think that could be your risk here in the near term. So we'll be watching the 2s very closely. If we break, and it looks like it's trying to break above right now. We'll see where it goes next week. Next week we have the QRA coming up. Maybe that changes things. But right now, watch that 2-year. I think that's something that could be a risk should that continue to climb. XHB may be respecting that. So home builders actually have done some damage as well, kind of like the Dow. I've talked about the 120 level, right? I said as long as we're above that, no problems. But we did, we just wiped out 5 weeks worth of trading in one on XHB with volume. So home builders may be starting to look at rates right now, and maybe that's the reason for the weakness here. I'm definitely paying attention to that. Next big levels around 110, 111. VNQ, good outside move on Friday. Weekly pattern is still fine, no problems, but I wouldn't want to see us back below 94. So real estate, possible lower highs there. XLF with a pretty good engulfing candle on Friday. Again, no damage, right? You're still above all the moving averages and everything, but good reversal candle. So I don't know, maybe Finns are looking at that as well. KRE, also a reversal candle on Friday. Could be due for some backing and filling here. Same thing with KBE. Broker dealer is still flat and still okay, but again, watch that 2-year yield. It's going to tell us a lot. Oil holding up just fine this week. We talked about this trend line last week. I said we would get above that, was my bias. We did. And now we've kind of just consolidated sideways. So I think the oil can still get up into like 74, 74.15 in the near term. And I think oil's bottomed, put it plainly. And again, if yields continue up, that's going to be a tailwind. XLE kind of had a sideways week here. And I like energy. I like energy going into the election. I think it rallies into the end of the year. So I think there's nothing really problematic with XLE here. I'd be a buyer on dips. And that goes for XOP and OIH as well. Uranium. So that was the big mover last week. And we just retraced this week. There's CCJ. Yeah, no problem. Just overbought, pulling back to the 20 moving average. You can see URNM and URNJ doing the same. No issues here, just pullbacks. Nat gas, it did get a bid. So we got back above 250, and we closed the week above that. We're going to roll over to the Z contract very shortly. And yeah, nat gas, I mean, now at this point, we'd probably be looking at, I could see this getting as high as maybe 370 into mid to end November. That's kind of just that's like the high end. But I definitely think we could retest 340 though. And then we'll see where it's at there. It usually tops out in like mid to late November. So, but nat gas coming back up off the lows. Dollar's still been really strong. Dollar got all the way up to 104.50 and it finally stalled out here. If the dollar does pull back, that could pull back yields, which obviously would kind of negate the situation I was talking about a minute ago. But yeah, dollar's had a massive run off the lows here. You get through 104.50, it's 105. So pretty big recovery for the DXY. Gold's still chugging higher. And again, this is why we've talked about before in the past, gold doesn't have to go inverse to the dollar all the time. They can go up together, and yields can go up with gold too. That's been happening lately as well. We did get a reversal candle on on Wednesday though. So we made a new all-time high, and then we closed below the previous day low. It's definitely, I wouldn't say that it's necessarily a top signal. If there was a lot more volume behind it, like this, I would say it could be a topping signal. Perhaps, here's my kind of theory. I think gold's going to rally into the election and the FOMC, and then I think if there's a time where it's going to have a correction, that's where it's going to be. But definitely maybe a little bit of short-term distribution. I'd still have this going to 28.50 right now. So we'll see. Gold very, very strong still. Silver did hit 35. It did back off though. I want to see this stay above 33 this week. So yeah, I would want to see a weekly close below like 33 or 32. But no problems here. Platinum also sideways to up this week. We got back to the trend line that we've been talking about. That's where we backed off. So platinum's still holding up well. And then you guys know my favorite. So did I know that Trump, specifically US asked G7 to consider sanctions on Russia, palladium, titanium, etc. Trump also said that he would lift sanctions on Russia this week. That was a big headline. And China firing the stimulus bazooka last time got palladium up to 3,000. Did I know that the U.S. was going to? I've been telling you guys about palladium for almost a year. Did I know that Russia was going to, G7 was going to say that? No. But when you buy something, right, that is in deep value and deep discount, that tells you the market's discounting any upside. And that's, good things happen, right? That news comes out, and all of a sudden the market's underinvested, right? So that's the thought process there, right? I've been telling you guys, like, I would be a holder of gold here. I wouldn't chase it higher. I'm not chasing and buying up here. If you want to buy a metal, buy something that's at a historical, this is a historically cheap level. And then you get any sort of good news, and look what happens. 15% in 2 days. Wedge breakout, beautiful pattern. I own it via Sprott, which is split between palladium and platinum. Take a look at the volume here. Yes, that is an all-time high. Weekly volume, all-time high. This has legs. So I like my palladium here and platinum. More so as catch-up plays. Copper not doing anything here. I'd want to see it stay above 425. We'll just say that. If we can get back above 441 on a daily close, I think it can rally back up to the highs. But copper has been kind of quiet lately. Bitcoin, just a sideways week. We hit 69K, and we've just kind of backed off of that. I think we're just building another base here for a move to all-time highs. So Bitcoin, another catch-up play here, I think. I think this looks really good. And I've been talking about that for a while as well. A nice strong weekly pattern, just trying to carve out another base for a move to 75. So again, this week, lots of earnings. Got jobs data all week long. We got PCE later. And then next week, the week after, FOMC and the election. So a lot coming up here. We're loaded. And we'll see if we break this trend line. I can see us getting back to 56.75 to 57. Upside, short-term resistance at 59 and then 6,000. So that's what I'm looking at here for the market. Should be a wild week. A lot of hedges going to be going on and coming off. There's going to be a lot of noise. We got earnings. It's going to be wild here, and should be an action-packed week. So should be a lot of fun. Anyways, guys, I'm going to wrap it up here. Again, you guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.